What's up, guys? It's May 13th, 2025. Hope you're having a good day today. Looks like we had a rally and a sideways price action. So we can see the whole market cycle right here on the chart. Breakout, pullback, channel phase, second leg right here, bars 5 through 9. Then the third leg pulls back, third leg, and then we go sideways. So breakout, channel phase, trading range. Market starts to break out again, depending on what happens on the overnight session and tomorrow's price action. Could be another trading range, could be a breakout to upside or downside. Okay, so the overnight session's starting to rally. Daily chart, 15-minute chart. Daily chart's breaking out. It's a tough spot because you could argue like 1, pull back like 2, pull back like 3, and trading range behavior. Or you could argue like 1, pull back like 2, pull back like 3. But this breakout could be the start to a new rally. Like 1, pull back like 2. Let's see what happens. I've been talking a little bit about how bulls want this objective and this objective, and then they're going to go here and here. And that's almost met, or it might be met today. Those are targets because they were pullbacks on the downside, from the downside. Bulls are going to get trapped here. Bulls are trapped here, here. Bulls got trapped here, 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 here. So when we have a downtrend, the pullbacks are targets for the bulls. Now we have an uptrend when the market starts to go range bound, sideways to down. This pullback is going to be a target for the bears, target for the bears, target for the bears, target for the bears. Okay, so daily 15-minute. Yesterday we had a big gap up. First bar was a bear bar. We went sideways, 3 pushes down, like 1, pull back like 2, pull back like 3. Then we went sideways for a little bit. So this could be a wedge bottom in a bull regime. I don't know where the EMA went, actually. We are in a bull regime, but where's the EMA? Oh man, we are super far away from the EMA. So the EMA is down here. So we're in a bull regime. Then we rally. Like 1, pull back like 2, pull back like 3. Is this today's price action? Oh, that was yesterday's price. So today's bar starts right here. Leg 3 yesterday, and leg 3 yesterday became a breakout today. Started the first leg, leg 1, pull back like 2, pull back like 3, pull back like 4, sideways. Look at the more legs we get, the more the market's going sideways. These 2 bars are strong to get second leg. First pullback's right here, get the second leg. This second leg had 2 legs with it. Leg 1, pull back leg 2, pull back, testing the high here, and it rallied again for 2 legs. Leg 1, pull back leg 2. So we keep an overall count of where the legs are at. Let's say it's the overall third leg. Like this is the overall third leg. Like 1, pull back like 2, pull back like 3. But within this third leg, there's 3 legs. Like 1, pull back like 2, pull back like 3. From the bears down, from the bear channel down to bar 15's low, there's 3 legs down. So yeah, this is a bear leg. But there's also like 1, pull back like 2, pull back like 3. And that's a wedge bottom in a bull regime. Same concept right here. Wedge bottom in a bull regime. Rallied. Rallied. So you kind of start to weigh out the probabilities depending on what leg count we're in and where we are in the market cycle. I would be very hesitant to hold long around 26, 27, 28, 29 because it's the third leg and it's the third leg. It's a nested third leg. So leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. 27 is an inside bar. 28 rallies and sells off. It's trapping bulls. They may hit out of longs or strong bulls will buy lower and get out at 50%. Just like how I mentioned, there's a wedge bottom here. There's a wedge bottom here. Leg 1, pull back leg 2, pull back leg 3. Double bottom on the EMA. Bears got short here, buy back shorts, and then it rallies. While bulls are buying the EMA, bears are getting out of trapped shorts from bar 32. Excuse me, 31. But anyways, let's talk about the chart. So let's do this. Bar 1. It's a training range bar. It has a bear leg and a bull leg, no bull body. How do I know it has a bear leg? I'll show you. There's the bear leg. See, it opened, sold off, and then rallied right around it. it closed right around the mid or the body of this bull bar, excuse me, the body of this bear bar, and that's what gives it that just one tick body. And there's a tail because it sold off, that creates a tail, and then it rallies back to the opening ish area for bar 1. So that's trading range bar on the 5-minute. Bar 2, bull bar closing on its high. The spike started down here, and now bulls finally get a body, so there's no bear leg hidden in it. Well, there could be a small pullbacks, but there's no big bear leg because it closed bullish and closed on its high. Bar 3's follow through. It's creating a gap. So now we have 3 bars in a gap. Bar 4 is that shallow reversal. First pullbacks fail generally. Context for this is good. Also be cautious because leg 1, pullback leg 2, pullback leg 3. So I think buying bar 4 is not the worst trade, but it is before bar. Buying. So the opening has a big chance of reversing. So if you're gonna buy bar 4, just be quick to hit out in case this is one of those days where it reverses. Yesterday, see, the market was reversing. Today, the context was a little bit different, and bears are already trapped. So bar 4 is not the worst trade. I think it's a good trade that led to a good rally. You can get 2R from 1 to the high of 3. Bar 5, bull bar closing on its high. Bar 6, bull bar closing on its high. See many gaps here, trapping bears. I'm going to draw all the gaps and I'll talk about it. Again, what does a gap mean? A gap is showing trap traders, and it takes 3 bars to make a gap. Bears are betting on the reversal, so they're going to short right around here. They're going to short the high of bar 5. They get trapped with bar 6, and they can't get out on bar 7. So they have to buy back shorts, increasing the bull pressure. If you want to learn more about gaps, I dropped a video in the member section about gaps, and I'm going, it's very overview, so you guys can get the layers, because I can jump right into this and people get confused. So for now, just understand 3 bars to make a gap. A gap shows trap traders. Open gaps, trending market, closed gaps, trading range. And when that gap is big at a leg 3, that could be an exhaustion gap. And look, this is the first gap that gets closed. So you see how bar 9's gap, or bar 8, 9, and 10's gap gets closed. That's a hint that the market context is already changing. Bar 10, where are we? See, I just jumped around. Okay, so bar 7 creates another gap, trap traders. Bar 8 closes, we get another gap, trapping traders, trapping bears. All these bears are getting trapped, and the gaps are getting smaller. So that already tells you that the trend is starting to get weak. And we see bar 9, the biggest gap, bigger than the gap that started the breakout. So be cautious if you're long because the market could reverse, and it does. Bar 10 rallies and sells off. This is the start. So the bar 10 high is the start to the bear spike. Bar 11, you could be thinking that this is bullish, but yeah, I mean, there's nothing wrong with thinking that, but just really bad follow through on 10, and there is a bear channel now. This is the start of the bear channel. Bar 12 breaks the high of 11 and starts the second leg down for the bears, and then we get sideways price action, creating a pullback for the bears. That's that leg 3 I was talking about. Leg 1, pullback, leg 2, pullback, leg 3. Bar 15, best looking bear bar closing on its low and a third leg down. So that could be right. What happens in the third leg? Trading range behavior. So if this is the third leg, bulls will be more inclined to buy it. Bar 15 is also testing the high of 8, which is where bulls made 1 to 2R very quickly. This is a trade I would take, but I would be quick to hit out because of the third leg situation. And when I say the trade, I'm talking about having a limit order long here and catching 1R. Bar 16 rallies and sells off, creates a tail. So now we know they're limit order bears at the high of 15, but then they get trapped at the high of 16, and then they get trapped on 17 and 18. We get another 3 bar breakout. Problem with this 3 bar breakout, it's happening in the third leg. Again, 1 pullback, 2 pullback, 3. There is a trap, and that trap happens right at resistance for bears, but then it goes sideways. So it's not the strongest leg because they have time to hit out at break even. What causes a good trend is tension between trap traders and bulls having to chase the market. Bulls didn't really have to chase the market here because they got that deep pullback already. And bears are able to get out at break even on 18, 19, 20, and maybe even 21. So they have about 20 minutes to decide what they want to do. Sideways price action at new highs. Bears are hoping for a reversal. 22 traps them. Big bull bar, but there's no gap, so it's a weak bull bar because followed up by a bear bar 23. 24 rallies and sells off. So now you know that bulls are more inclined to buy pullbacks instead of hold at highs. Here, bulls were buying the close, so we know they're okay at buying new prices. Here, bulls are selling at a high, so they're more inclined to buy pullbacks, and we can kind of see that already. Bear bar, bull bar, so they bought the pullback. Bear bar, bought the pullback. Bear bar, bought the pullback. 3 bull bars, but then it doesn't go that far without a 20-minute pullback. And then we have that bull bar 22, sideways price action 23, 24 now rallies and sells off. Bulls buy the high of this to pull back. Look at the high of 20, what is that, 25? Look at the high of 25. It sells off. So bulls are not really holding at new highs. Before this pullback happened, you can already tell that the market's looking to pull back soon. 27, inside bar. 28, rallies, sells off, trapping them. Good follow through for the bears. 29. When I say good follow through, that's I'm using that very loosely because there's a tail. We are in a bull regime, but just in terms of having 2 bear bars in a row, excluding 1920 trading range bars, this is the first time bears had 2 bear bars in a row, and even 28 could be considered a trading range bar because there's a tail there. So keep that in mind. And then second leg traps are common in trading ranges. Bar 30 becomes a pullback for the bear leg down. That's around the high of 28. Leg 1, pullback leg 2. Here's that wedge we mentioned earlier. Leg 1, pullback leg 2, pullback leg 3, creates a double bottom. Bears that shorted the low of 31 are hoping for a collapse. Instead, they're trapped with 32 and 33. 33 rallies right up to the previous resistance, the high of 31, and it sells back off. This bar 34 is good for the bears, not because the bear bar closing on its low. Yes, that bears always want to see bear bars closing on its low, but it gives chance for trap bears to get out at break even. This is the formation for a double bottom. They short the first leg down, they short higher, they get out, make money on their second entry, and they get out at break even on the first, buying back shorts at the same price bulls are going to buy into support. And that's enough energy for another 2 to 3 legs higher. Leg 1, pullback leg 2, pullback leg 3. It's a weak 3 legs. This is actually the 4th overall leg. If you want to just count today's price action, leg 1, pullback leg 2, pullback leg 3, pullback leg 4. If you want to count yesterday's leg 1, pullback leg 2, pullback leg 3, pullback leg 4, pullback leg 5. So it's getting dicey for the bulls. We're in the 5th leg. That special dynamic of 3 traders is not present in any leg except the second leg. And so it's not the dynamic for second legs. You guys know I've mentioned it before. It's traders wanting to press the bet. So bulls that bought the high of 1, they're looking for a pullback to press their winning position. The second is trap bears. So bears that short here are now trapped, being forced to buy back the market. The third are the traders like us looking to buy into a second leg. And I said that dynamic doesn't exist, but I use that term again loosely because there are traders who wanted to front run this breakout 35. There are trap bulls that wanted to there are trap bears right here shorting, and now they're trapped on 36, and 37 does become that pullback. So for this piece of price structure, that dynamic is there, but in the overall context, we are still in a later leg, so the probabilities for trend continuation go down. You have to calibrate your expectations, and this would be more of a scalp get out. Because, I can go on about that a lot. I might have to make a separate video because that dynamic is extremely important. If that dynamic is present, there's a good chance for a second leg. That's not to say that it will work every time. Every trade fails, and that's where I'm becoming a systematic trader. So for me, losses are part of the game. Discretionary traders might be able to handle that differently. But for now, just understand that, the market is at best 60-70%. I'll just say 60-40 at best. Most of the time, the market's ranging on a higher time frame or a lower time frame, which is generally 50-50. So all setups do fail, but it's over time you keep taking the same setup over and over and over and over again, and you get better at spotting those failed setups. So let's say this setup you buy 37 on the same context that it's shallow pullback after a breakout because you can spot the second leg dynamic. Well, you hold too long. In this case, you got saved with 46 to 50, but who's to say that this leg doesn't happen and now you get trapped? Then you go back, you log in into TradeZella, however you like to log, and then you just start to notice, okay, yeah, this was a second leg, but I was looking for a swing in an overall 4th leg. So I don't want to go off on a tangent there, but it is important that we learn how to teach ourselves. 41, bear bar, breaking the low of bar 40. We get a 5 bar bear channel, 1, 2, 3, 4, 5. lots of overlap, and all the bars have tails at the bottom, so bulls are still buying bars. There's not a lot of conviction by the bears. 46, big bear bull bar closing on its high, followed through 47. There is a gap right here, so we know bears are not trapped, and then you don't get a bear bar. It's not a bull bar. It's not the worst. It's not the best. It's not the worst. Bar 48. We see bar 49. It's climactic. It's one of the bigger bars out of all the bars since bar 9. So keep that in mind if you're holding long, thinking for a new rally. I would just be hesitant because it's a nice looking bar at the end of a 3 or 4 leg move. 50. Bear bar closing on slow. 51 has a tail and sells off. 52 bull bar could be just a pullback leg 1, pullback leg 2. And then we go into a trading range. Pretty tough. It's a tight trading range. If you're looking for a collapse, I wouldn't bet on it because the best the bears can do is get a trading range. And even this leg down, it only sold off to the 9 high, I think. Let me be accurate. So yeah, it only sold off to the 9 high. So even this leg, it is tradable if you want to press it. 30 points, 25 points. It's not a full-on reversal. And I think we saw the overnight session. It was rallying when we looked at it. Now it's starting to sell off. So what is that? Bar 212 is testing the breakout point here. And it found more sellers. 219 is starting to break below the EMA. But then we'll have to see if 211 has more buyers. Because that's what it's testing right now. Buy low, sell high. I do think the market will travel back down here. Right around to the red line. But I don't really care to think. I just wait for the market to make its move and then I get on that second leg. So what are the trades today? Okay, here's the 3 bar range breakout. It's met on 9. If you're looking at that's a trading range measure move. If you're looking for a leg measure move, you put it below the pullback, and that's met there. 5, 6, 7, 8, 9. If you're looking for 1R of this, I do think that's asking for a lot, but put it at the bottom of the pullback, bar 15. Then you hold. It's just missed with bar 49. In trading ranges, targets will get missed by, it's usually by like 1 or 2 ticks. In this case, it was a substantial amount of points. 4 points, so I wouldn't consider that a pass. They failed. 1-to-1 failed. Again, measured moves are not the end all and be all of everything. They're just designed to keep us on the right side of the momentum. For instance, if you're looking for a measured move 15, you're not going to get that because it's 3 legs down. We're in a bull regime. It's better to be long. Bulls are trying to make new highs every bar. 16, 17, 18. 3 bars, put it at the bottom, pullback. You see 1-to-1's met and it starts to go sideways. There's nothing wrong, when you're in a broad bull channel. Experienced traders can scalp new highs. That's where bulls will be taking profits. And if you were going to scalp new highs, you could be making 5 to 6 points a trade. But I think just trading with the trend is easier. This is not a new high, but there's a new high right here. And that's if you short the exact low and get out exactly where you're supposed to. Maybe you catch the breakout here. 16. So you could make money shorting, but it's definitely the harder trade on a day like today. I kind of skimmed over this, but I just want to go through it now because I realized there's a second leg. So we have a rally, leg 1, pullback leg 2, pullback leg 3. That's a wedge top into resistance after a prolonged trading range. Delete this. Third leg generally is trading range behavior. 75. Inside bar, 76 breaks out. We have a tail. Bulls are trying to buy the low of 76 over for an end of the day rally. Instead, this ends up becoming a pullback, and as 77 starts to sell off, bulls are going to hit out of a losing position. Some of them will get out break even. Some of them will hold a losing position. And as they are selling out, that tension between losing traders and bears looking to press creates bar 77, the second leg. 3 legs down. Leg 1, pullback leg 2, pullback leg 3, pullback leg 4 even. So even this sell-off is already climactic because there's four fractal legs down. Maybe more than 4. leg 1, pull back leg 2, pull back leg 3, pull back leg 4, pull back leg 5. So that's each trend line. That's almost each candle. I think there was 5 candles there. 1, 2, 3, 4, 5. Yeah, so each candle is its own leg. Sometimes that question gets tossed around in Discord. It's like, so what you're saying is each candle its own leg, and yeah, that's exactly what I'm saying. On a smaller time frame, this is a leg, breaks 54, breaks the low of 53, so there's the second leg down. This breaks the leg, third leg down. All right, guys. Hope you guys had a good one. Looking forward to trading. It was hard for me to get filled, and I had to go to work, so I didn't get to trade too much. Yesterday, I only got to trade 2 days. That's why I trade the overnight session to have a little bit more time. So yeah, I mentioned how there could be more buyers at 211, and 220 is starting to rally. I still think that the market eventually somehow will get down here. I don't know in what manner. If I was in a trade right now, I would have got filled on 219, and I would almost hit my profits on that bar right there. So hope you guys having a good one. Hope you guys had a good day. If you have any questions, please let me know. If you learned something, share the show. Don't be a hoe. I'll talk to you guys tomorrow. Bye.